Everybody, Kyle Sasser here. It's everyone's favorite time of the month. That's right. Market statistics time. These statistics are for the greater Dayton, Ohio metro area for the month of February 2023. So you're probably asking yourself, if you've been watching these videos for a while, Kyle, why is your hair back in a bun? Well, I actually have a hair appointment scheduled for tomorrow. Hair was getting a little bit long, so just looking to get that touched up. You're probably also asking yourself, Kyle, it's March. Why are we looking at February numbers? And basically, I have put together these beautiful new reports, painstakingly compiled by myself, as well as my team members, because the statistics that we were getting from the state and the county were taking way too long to come in. Normally, I would not even get the first report until the 20th of the month. So now, with the way we do it, I actually have statistics in hand by the 5th. We generate the reports. They're available for download or email instantaneously there. Then I create this video report explaining the statistics and then released to you. So basically doing this has allowed us to get the jump on everybody else, basically. So instead of the statistics video coming out at the very end of the month, we can now usually have it out by maybe the 10th or 11th. We're definitely trying to get it out sooner. My ideal would be if we could get it out by the 7th of the month. That would be firing on all cylinders for sure. Still work in progress though. The other thing to know, and that you're probably curious about, is why we look at year over year instead of month to month. And the reason why is because the real estate market has a natural ebb and flow throughout the course of a year. There are certain months that just are always quiet, usually coinciding with the beginning of school or wintertime. So comparing month to month doesn't have a lot of value, although with where the market is going and what it's been doing the last few months, we are definitely paying attention to month-to-month statistics here at Ashler Home Team. So we normally look at month-to-month. So this month we're looking at February 2023 compared to February 2022. Obviously a lot of stuff has happened since then, and I will get to the explanation of all that stuff by the end of the video. Generally speaking, that's how we structure the real estate stats. There is a ton of terrible information out there currently regarding market stats. The dumbest one that I saw was from Bloomberg, believe it or not. And basically they were trying to paint this huge picture from statistics gathered in 2022, stating that, major market shift was happening, prices are skyrocketing, tons of institutional investor cash buyers. Anyone that pays attention to any of these statistics knows that that is wrong. Anybody that is trying to base 2023 pricing, strategy, purchasing requirements off of 2022 numbers is really doing themselves a disservice, and it's gonna have a bad time. So let's get into these stats. So let's get into these Dayton numbers here. So total number of closed sales was down 12.7% from 1,004 to 876. Median sales price and average sales price. So those of you remembering back to math class, average, obviously, let's say you have 20 houses for sale. You add up the prices that all those houses sold for, and then you divide it by 20, that gives you the average. Median sales price is a little different. If you have 60 homes, let's say, the median sales price is the point at which there is an equal number of more expensive and less expensive homes. So it's more of a true midpoint of the market. Average sales price can be affected if a large number of very expensive or inexpensive homes sell, and that becomes doubly so as total number of homes sold decreases. You came here for the numbers, right? Median sales price is up 8.3%, $195,500. Average sales price up 6.9%, total of $230,438. Median percentage of original price. So what this is whenever a house gets listed for sale, what percentage of that original asking price does it eventually sell for? This has been hanging up closer to 100,000, but it's been down for the last few months. It's currently down 2.7% to 97.3% of original asking price. Median time to contract is up 8.2% to 53 days. Honestly, compared to a lot of other markets, Dayton is kind of steady Eddie. I mean, total number of closed sales is down, and the number of new listings was really down in January. But even with that, still hanging out pretty steadily. Total number of new listings was down 7.9%. Total of 1,044, which is down from 1,134. The doom and gloom stats, which are foreclosures and short sales, not a lot going on in that segment. Foreclosures, there was a total of 6, which is down from 9 in February 2022. And short sales, we came up with 0 in our statistical search. I do kind of want to go over the median sales price, just kind of how it's been bouncing around here. The peak market was July 2022, and basically the market's just been kind of bounced around a little bit since then. So peak market was 221,000. So that was July. So July 2022, we had 221,000. August, that dropped to 205. September held the same at 205. October dropped a little bit to 198. November down to 190. December was also 190. January held out at 189. And February, we're about back up to 195. So you can see there, the market's kind of bouncing around, definitely trying to figure out what it's trying to do. I do like to go over the different price points because a $1 million house sells with a little bit different time frame from a $200,000 house. Primarily, that is a function of the buyer pool size. There just is not as many people looking to buy $2 million homes compared to $200,000 homes. Total number of closed sales. So there was no homes in the Dayton Metro area that sold for $1 million or more, which is that's pretty interesting, actually. $100,000 to $150,000 was down 23.6%, total of $165,000. $150,000 to $200,000 was down 11.9%, total of 171 sold. $200,000 to $250,000 was down 19.9%. Total of 109. $250,000 to $300,000 was down 7.3% for a total of 102. Interestingly, though, $300,000 to $400,000 was actually up 118 homes total, and $400,000 to $600,000 was also up 3.9%, total of 80. So if you're kind of getting the feeling that the market's trying to figure out what it's doing and that there's not an absolute clear trend, you are not far off the mark. Total number of listings by list price, primarily $300,000 and under. There's fewer homes going up for sale. Above $300,000 is either held steady or there's more. This isn't necessarily because we're building a lot more very expensive homes. It's more the fact that homes have slid up a price category or two over the last year or so. But, let's just hit some high points here. So $150,000 to $200,000, there was 24.5% fewer new listings, total of 173. $250,000 to $300,000, there was 13.5% fewer homes, total of 122. $400,000 to $600,000, there was 14.3% more homes sold, for 112, and so on and so forth. Now, so far as Dayton goes, I'm still trying to obtain certain metrics that basically no one seems to have. So that is the Dayton statistics. All right, so let's get into the nuts and bolts, the nitty gritty here of what does it all mean? We got a lot of stuff going on here. Overall, though, the picture I can paint is downward pressure. And that is simply a result of way more inventory for sale and fewer buyers. Although we did have a bit of a bump in the number of buyers in February, compared to 2022, still overwhelmingly a building and inventory market. I will keep an eye on those stats in subsequent months just to see if buyers coming back is the current trend. Things are basically bouncing around. Things are trying to get figured out. I'm sure you've probably been paying attention to the news, heard talk about interest rates and all this other stuff. A few things on interest rate. So the Fed recently just announced that they're probably going to go a little bit higher. Of course, that resulted in mortgage rates instantly going up a half percentage point or so. The last 7, 8, 9 months, it's basically been bouncing around in the 6s. We were, for a little bit of time, down in the 5%, but high 5s to high 6s is where we've been hanging out at. I've seen a couple tick over in the 7%, but that's more the exception. But again, that's always in flux currently. Normally, mortgage rates do not move nearly that much in short time. A lot of that is reactionary stuff from lenders trying to predict what the Fed and the market is going to do. Historically speaking, last 20 years, interest rates have bounced between 4% and high 6s. So we're still within range going back to the year 2000. If we are looking at a very long time frames, there definitely has been times that were quite a bit, well, considerably higher on interest rates. Talk to somebody who bought a house in the late 70s or 80s, and they will talk to you about 10%, 11%, 12%, 15% interest rates. A little bit of a caveat on that, because I know there is a lot of real estate training going on about using that as leverage to get people to buy. The 15% interest rates were not buying $400,000 houses. They were buying like $40,000 houses. So, a little bit of context there matters. But the truth is 4% to 7%, is it as pretty as the 2 to 3% that we had? No, but 2% is the outlier, not 4, 5, or 6%. 4, 5, or 6% is where we have been for the last 22 years. The only reason we were down in low 3s and in the 2s is because of the pandemic and the powers that be trying to keep things afloat, which has got us the current inflationary rate, which is why things have reversed and why interest rates are so high now, because they're trying to put brakes on it. So 4, 5, 6 isn't terrible, it's doable, but that is one of the primary movers for bringing prices down, because that has dropped demand. But same point in time, personally, my belief is that if you're looking to make a positive life change, or if you're looking to take a better job, making a positive improvement in your life, that is the right time to make a move. Because the alternative is you live someplace where you're going to be miserable and that you've already decided that there's a better place that you want to be. So execute and make the move to where you want to be. Interest rates will change. More than likely, they will go down at some point. So technically, yeah, you can refinance. There's other things you can do. We've been negotiating a ton of price reductions, seller concessions, repairs, you name it, just because there is not as many buyers. So we are able to ask for a lot more than we have for years, like 4 or 5 years. One thing that you can ask for is you can ask the seller to buy down your interest rate. And basically what that is seller comes up with money and that drops your interest rate for a year or two. If you happen to be selling another home to purchase a new home, you can put 30 or 40% down, and that will always drop your interest rate significantly below current rates. I just purchased a home in pretty much the peak of the market, and I was able to reduce my interest rate by, I think, 1.5 to 2% off of the going rate just by putting up a sizable down payment. Now, I know 100% that is not everyone's circumstance. I'm just saying that there are options out there. There's first-time buyer down payment assistance programs. There's a lot of options out there. So if you feel like you're on the fence for buying and you know that you're going to be happier somewhere else, just reach out. We'll talk about it. There's probably a solution to make it happen. On the seller side, that time to contract number is getting a little scary. We're definitely getting into buyer market territory, and I want to kind of explain one thing that these metrics are missing, and that is, yes, median and average sales price is still elevated compared to previous years. We're still up compared to January, February 2022, which is pretty good. I mean, that was already well above previous highs, 2006. What these metrics are not telling you is that those pricing stats and the time to contract stats only apply to the houses that are actually selling. There are a lot of homes that are just not selling, and they're sitting on the market. There's been price reductions. So those home prices, those time to contracts, those are not being accounted in these metrics. And that's why inventory is up so significantly. That's why we have so many more houses. I mean, yes, it is, well, it's a two-sided thing. So there's low buyer demand, which means there's a lot of inventory getting built. So there's a lot of stuff that's like 90, 100, 120, 130 days. And as those prices come down on those houses that have been on the market for so long and people start buying them, those numbers and those metrics are going to drop. Now, there are rare cases where there are multiple offers on houses. Honestly, a great home and a great location that's a great renovation at a great price, there's always going to be demand on that house. So in those cases, 2, 3, or 4 offers is not unusual. If you have a house that's maybe off the beaten path a little bit, or has a couple sore spots with renovations and stuff, you can still sell that house for a great price, but it is going to take a while, and the overall market pressure is working against you on the sales. So if we're looking at the hump here, we're definitely down off the peak, but we're still, let's say this is the baseline. We're still pretty high up there. So if you've been thinking about selling, it's still an amazing time to, cash out, whatever you want to call it, realize your return on investment. Yes, it is not as bananas of a market as it was early 2022, but honestly, early 2022 is not sustainable. Like 7 days to contract and prices going up $30,000 a month, that is not sustainable in the least. So if you've been thinking about selling, yeah, reach out, because market's not working in your favor at all currently. Overall outlook, keep an eye on a few things here. So we're looking at demand. If demand comes back, prices are going to come back. And quite frankly, there's still a lot of people that want to move, but they've taken a little bit of a breather to get things figured out. We have had a bump in buyer demand, which, as I mentioned previously, anecdotally in my business, I noticed, had a lot of buyers reach out, a lot of new buyers, a lot of first-time buyers actually, which is awesome to see. And it's nice to see that confirmed in the stats as well. Number of new listings is down, but we're still building inventory just because demand is so low. And interest rates are kind of that, depending upon what interest rates do, that can dictate the demand. So, because people are still a little skittish about purchasing currently. So if interest rates tick back down into the low 6s to 5s, we should see continued building demand. If they hang out high 6s or goes up into the 7, that's going to keep demand low, and prices should fall accordingly. So overall, the only market trend that I can tell you for certain is uncertainty. There's not a clear trend like there has been for the last 6, 7, 8 years. So a lot of people reaching, trying to figure stuff out. So if you see like some statistics reports or news stories that sound like bonkers, just know that a lot of the major organizations basically don't do any research on any of it. Some of the stuff that I've seen Redfin and Zillow put out the last year or so, absolutely terrible. So those are the market statistics for the month of February 2023. Hope you've enjoyed this video and explanation. If you have any thoughts, questions, concerns, please feel free to shoot me an email, kyle@ashlerre.com. There's also a link down below to contact, or you just throw a comment into the video. I try to do one of these every month. So you know what to do, you know what to click. You can also sign up on the website if you would like a copy of those beautiful reports mailed to you. My name is Kyle Sasser, and would love to help you either find a home or sell your home. If you would like some assistance, you can book a call with me. Again, links down below. You can also go to ashlerre.com. We have copies of the statistics there. We have a link to the book call section. You can also search for your home by neighborhood, school, a few other things there. I'd love to help you with any real estate question you have. Other than that, thank you so much for tuning in, and I'll talk to you soon.